Hey everybody, this is Jim at sb500chart.com. It's Sunday afternoon, about 3 o'clock on August 16th, 2020. We're going to take a look at the chart for the week ending the 14th. Before we do that, as always, I need to remind you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I am not a licensed financial professional. I don't claim to be anyone other than just a guy who draws lines on charts. So let's take a look. Okay, I'm hoping the website sticks with me here. It's been really sluggish. So, what we're looking at this past week is the possibility that even though we don't have a typical support line here that you would expect in a rising wedge, it sure looks like it's sort of a rising wedge to me. What I mean by that is if we had a touch, say right here or right here, something to give us another support level on this line, and that would, I could extend it on back like that. We don't have any touch all along this area until we get to the very end of July and the beginning of August. And that looks a little bit odd to me. But when if you sort of ignore that, we have a clear line of resistance here, and we have 4 touches on this lower line, including where we closed last Friday. Additionally, you may not know this, but one of the things that this is not really, well, I'll take credit for it. I've never seen any other technical analysis textbook or anything talk about the idea of putting a midpoint line into a pattern like this to help us gauge how just gauge the, I don't want to say the accuracy, that's not the right word, the validity of the pattern. So we put that midpoint line in there and look at all that lines up on that. So all of that tells me I'm really thinking this is a rising wedge, and it will likely break down in the week ahead. But it's nothing until this lower line breaks. Okay, so what could happen other than this line break? Well, we could zoom on up to 3,500 or 3,600 or something like that, and at that point you go, wait a minute, this isn't a rising wedge, this is a parallel channel, and we were just kind of bouncing along the support line of that larger parallel channel. We've seen that happen. It could happen. But if this line breaks, then I'm looking for one of 2 things. First off, I'm looking for significant selling pressure to take the markets down, probably, I'm thinking 6%, just eyeballing it, from 33.72 where we are now to at least 31.50. That would be a 222 point drop. And that is roughly 6.25%, something like that. So that wouldn't surprise me in the least. And if that's all that happens, that doesn't mean the party's over. But why might this be happening now? Well, this line right here. Remember, that line is the all-time high that was in place before we got the coronavirus madness that absolutely took everybody's breath away. Literally some people, and I'm not making light of that, I mean literally a lot of people have died. But look at how the markets have recovered. We are now within, well, let's take a look. How close are we? This past week, we got within 8 points, 7 points, 6 points of the all-time high. Okay, the question is, The question is will, not why. Will this market be able to get higher than that? And if so, high enough to where we realize we're starting a new leg up, as opposed to just coming up to that level again, sort of in a, if you will, sort of gap filling. Again, I don't believe gaps have to be filled. I think they usually are filled, but I don't think it's because they have to be. I think it's because they just tend to be. Let me digress just for a second. If you look at any point on a chart and say, let's pretend like there was a gap there, even though there was no gap, my hunch is you would revisit that area with the same frequency that you would revisit a gap. There is a difference, however. And when you revisit a gap, again, not because they're magical and they have to be revisited, but when you get back to the gap, you very often find people who are traders who are interested in that area because they woke up one morning and got blindsided either by a gap down, or they sold low and got blindsided by a missed opportunity with a gap up. So we had that big gap back there in February. We have already gotten higher than that gap. But I think some of the psychology could still be at play. And that is, now that we are so close to that all-time high that was in place before anybody even really was thinking about COVID-19, now that we're so close to that, it sort of makes sense that we would see a rising wedge, and with that, the specter, if it breaks down, of a significant sell-off. And by significant, I don't mean where you get into bear market territory necessarily, but I'm saying to come down and find support somewhere other than this line right here. In other words, this line's going to break, I think. Pretty sure at some point, got to. But will it break this week? Will we even break it tomorrow morning? That's certainly a possibility. And again, what is the tendency of a wedge? A rising wedge? Well, any wedge. The tendency is for, once that wedge is confirmed by a break of the trend line, in this case support, then you would expect a sell-off to take place that would take you back to about where that wedge started to form. Our question here is, where is that? Did this wedge start to form here, because that's the first place we find a support line? Or did that wedge start to form back here because that was the low-end place before we started this thing to begin with? It's a little fuzzy there. So, let me just say this about this week. If we look at it here on a 5-minute chart, there you see the week was up just a little bit. We had that significant sell-off on the 11th, but then we had a quick recovery, and I told you, I confessed, when we got underneath this line here, right in about this area, I was selling some stocks and one ETF, and I shouldn't have, because I could have done better if I just waited a day or two. So be it. All for profits. So, you can't say that's a bad thing. Just could have gotten a little bit more out of it. But now you see there, essentially, not exactly, but essentially flat for the week, with a little volatility there on Tuesday afternoon, and then the recovery here on Wednesday, Thursday, and Friday. Now, Wednesday, Thursday, and Friday sort of look like, if you want to be an optimist, sort of look like it might even be a small bull flag. What would that mean? Well, that would mean we could very easily, and like I said, I think we are going to break down in this larger pattern, but it doesn't have to be now. Matter of fact, we could get up to over 3,400. We could have a great day tomorrow. We could be up almost 2%. well, maybe not quite 2, about 1.5%, and get up to over 3,400, and close over 3,400, and still be inside of this wedge. And it would still carry with it a bearish intent upon confirmation by breaking down this lower line of support. So that's where we are this week. I know I kind of talked a little bit about different things, and forgive me for that. Moral of the story, watch this line. If it breaks down, I think we're going to be in for a likely, I'm just guessing here, but probably a 6% slide minimum. And at that point, we start to look at the chart for where we might find some support. This is the old neckline, by the way, from that huge inverted head and shoulders pattern back here that was obliterated by COVID-19. That's that line right there. That could give us some support. And finally, in case you haven't been with us for a while, you remember we were talking about that range where we had 3 targets. Those targets were found from a couple of patterns, actually from 3 patterns. We had this triangle right here. We had an inverted head and shoulders pattern that was kind of around that same area. Then we had a cup and a handle. This past week, all 3 of those patterns were successful in reaching their targets. So the chart seems to still be working. Let's see what happens with this wedge going forward into this next week. So for now, thanks for taking time out of your weekend to watch this. And if you are a subscriber, thanks for your very kind support. Videos are going to be kind of a little, I don't want to say spotty, but they might be late sometimes in this upcoming week. Please be patient. I'll try to let you know. So anyway, thanks for watching and take care.